What's up, Rob? How you doing, amigo?
Happy long weekend. Yeah, excited to be here.
Indeed, it is. That's right. Labor Day is Monday.
No trading Monday.
The addicted side of me says, "Man, I'm gonna miss that." But the
I know.
rational and logical side is like, another extra day is
An
probably
extra day is okay,
yeah.
especially
Well,
after we've been hanging out in this balance range for 10 days or whatever. So I'm totally fine with
well,
day
my
trading.
ass is sore as hell from that. So I'll be quite frank. An extra day will not hurt my
Well, not
feelings.
heard.
Yeah,
Yeah, exactly.
you know,
We weren't on some of those moves early. Yeah, there's just no getting on them.
I'm very aware. There's a lot of guys in our room, including you. I'm sure did very well this week. I actually did not have one of my best weeks, and I'm willing to admit that. I actually was, again, I'm still bullish. I think we're
Hmm.
all are bullish, and this was just a giant 2 week accumulation phase, more than likely for the next push up.
Yeah,
But for me, just they continue to go down low and test the lows, and then pop up and test the highs and
yeah,
sweep the
exactly.
lows, and I'm like, after, listen, the last Friday I had to go trade CL. I mean, it was like, I gotta get away from this shit for a second.
Get something that's not range bound. That'd be great.
Yeah, for sure. Like I'm like always looking for that push. I'm like, where the fuck? I mean, I don't mind
Well,
getting stopped out
especially
of my runners, but
yeah,
go ahead.
because you're when your edge is really at the edges and you're just in a big balance, there's just not edges to really grab on except for once
Yeah.
or twice. And if there's something that's out of alignment, you don't get on it. Then yeah,
And after you and I mean, we just spent 2 hours bullshitting before we even hit record, and we kind of
yeah,
went over the charts. And in hindsight, there's a lot of things I could have done differently.
me
And
too.
when you're in the moment, and things don't always go as planned. But it's okay. Listen, we're
Yeah,
allowed to have bad days, bad weeks. I'm glad that we all didn't do that, but. I was a little early on some of my stock picks last week. I hit some of them, but a little early on some of those too. And, obviously we're going to go over some of that today, but I'm still very much in the camp on a lot of that, which we talked about. So it was a stressful week for me a little bit. I just, balance is balance. It is what it is, right?
yeah, balance is balance. I know that we were talking about this is a really big important area. We're still bullish, and based on Friday's close, I'm still bullish. But I mean, midweek, it depended on the hour you asked me. I was like, oh, we're going down.
Yeah, I
So
know, right?
um,
It's true. It's true.
yeah, I would say I'm still not super clear, but if I was to say, I'm more leaning still bullish based on Friday's close.
Absolutely. And, we pulled back and hit some really significant support after NVIDIA earnings on both the NASDAQ and the ES. They did it after hours. And then what was funny is the cash session, it didn't even look like anything happened. I mean, we were actually gapped up, which was quite crazy. So,
Crazy.
yeah, it was. It was insane. So, we know what we're coming off of. We clearly know that we're, balancing and we're still in an uptrend. And so, we're looking for more up. But it's been an interesting week to say the least. I mean, it's been a long time since I can say that we've had 10 inside days. I mean, we've
Yeah.
essentially just been floating back and forth, which is, yeah. Anyway, so it's been definitely an interesting week for sure. So you and I had a few things on the list to talk about this week, man. Where do you want to start?
I thought this was probably the most interesting to people, but Spot Gamma put out that tweet about Dollar General, like falling
Yeah.
30% because their customers just aren't making enough money to shop there. And so I thought that was pretty interesting. I thought that was pretty fascinating. And then,
Scary, all at the
its
same time.
brother, the Dollar Tree, Dollar General.
Yeah, I'm actually looking for that tweet right now. I commented on it. Maybe it's in our futures channel. I commented on it in the room, and I'm like, can this really be like? Is that real? Oh, here it is, right here. And it's funny because Jag, he immediately says he's like, oh, they're just saying that shit because they suck. I'm like, okay, well, that's a
All right.
fair assessment, right? So here it is, right here. This was an interesting statement, to say the least, that that their stock plunged 30% because customers don't have enough money to shop there. So you actually charted Dollar General, and I didn't look at it until today. And talk about a discount, man. Unbelievable. Like,
Yeah,
what's
it's really sort of falling from grace, because it has been one of those stocks that, even CNBC and Jim Cramer a few years ago were saying, just, this thing should always just be on a permanent up path. And he talked about, like, even in some of these, wealthier places, whereas Dollar General and Dollar Tree had been sort of popping up, and people will go there and just buy like holiday items and things like
Mhm.
that. Even that's starting to sort of like fall away, and sort of shine is falling off the stock. And you could see that it actually starting to look a little sick now. Like
Well,
it's been coming down hard.
I remember in 2008 that those stocks, Dollar General and Dollar Tree, like those stocks like skyrocketed. The rest of the world was falling out, and those stocks just went bananas because people were
Mm.
broke. So everybody was shopping at these particular stores here. Here you go. This this is Dollar General. I mean, we're actually coming into kind of a decent spot to buy down here around $73, but my Lord, I mean, this thing is down from $270, which is pretty incredible. I mean, just talk about a deal. Right? Like, I guess,
Exactly.
would you say to me if you liked it at 160, you're going to love
Yeah,
it?
yeah, you can love it at 80. I mean, it's half
Yeah,
off. I mean,
this thing's down almost 70% from the highs. I mean, good Lord. And the other one is Dollar Tree, I think, right?
yes,
DLT, I think. Dollar, here it is, DLTR. This thing too.
yeah.
I mean, it's just down massive. Obviously, in sympathy or what have you, it's down 54%. It's amazing to me that these stocks are just getting punished like that. I mean, money is. I mean, it's the dollar is going less now, right? It's like I would assume these stores would be doing great.
Yeah, you would think that these, with inflation and the cost of goods, that you would have more people shopping at these stores, but evidently not. Like they're not even matching, any comparables in the retail space or consumer packaged goods space. It's been pretty shocking to me.
It is pretty shocking. Another thing that's shocking to me is I'm sure that you have been kind of looking at some headlines and stuff that, our market is still cruising. We're cooking. Our dollar is basically like doesn't go as far anymore, right? Like, what did they say? It's lost 90% of its buying power over the past decade or something like that. I mean, or maybe it's a little longer than that, I don't know, but it's lost an extreme amount of its buying power. The markets are still rocking, and people are crying about inflation, and they're still broke, or they claim they're broke. But a lot of these stocks are still looking pretty lofty. I mean, you've got Nvidia with 60 times earnings, and you've got credit card debt now is at, I believe, pre-pandemic levels. We are like in the trillions of dollars in credit card debt, as far as the individual is concerned. They are saying that savings has plummeted to, I don't know if it's an all-time low or what it is, but it's like the general average American doesn't have more than $1,000 in savings now, is what I read.
Mhm.
We also have a insanely high number of auto defaults. And so, the auto defaults is huge for me as a key indicator, only because, people have to have their car to get around,
Yeah.
right? So it's like, are they just spending too much on cars? Are cars too much money? I guess what I'm trying to get at by saying all this is that, it's like that meme where the building's on fire and it says nothing to see here.
No, yeah, so everything's fine.
Yeah, I guess I'm just a little. It's weird. It's like we have these contradictory sentiments, right? And then so you probably don't know this, and most of the people watching don't know this. My mom owns a jewelry store. It's been handed down from generation to generation, and I'm basically where the buck stops because I'm not a jeweler. So, but my mother's business is one of those businesses where you don't need anything, right? You don't jewelry stores. There's nothing in a jewelry store that you need to survive, right? So it's all like it's wants, it's high ticket
Mhm.
luxury want items. And usually those are the first things to start to dissipate. So I talk to her quite frequently, and I'm always like, hey, how's business? How's it going? Because if people aren't buying diamonds, then,
Yeah.
what's wrong here, right? Dude, her business is great. I mean, she's
Really?
rocking, dude. Yes. And
Wow.
she really expected it to slow down the first part of this year. She says she's doing great. And so I just find this whole thing baffling, right? I mean, now she did tell me that, what do you call him? The average Joe. There, you have a name for it. I love it. It's what's the name that you use? I
Is
don't
it
know.
Joe
Anyway,
Sixpack? Oh,
yeah, Joe Sixpack. That's it. She told me Joe Sixpack is she has way less $100 sales. People coming in and they're buying little silver necklaces for their girlfriends, stuff like that. That has slimmed way down. But the people who are still spending are the big ticket item people, which is the usual, right? I mean, people with money tend to always have money in a sense, and so those are who are still spending the money, which is big ticket item people. But I just found it interesting with, just kind of the conflicting signals, I guess you could say.
Yeah, it's pretty big, right?
Yeah.
Like it is. We're getting a bunch of mixed signals because, when you look at the economic data, they're saying, inflation's been cooling off and such. But for like everyday items, people it's really hard to wrap your head around, going to McDonald's and spending $16. Like,
Dude, what?
you know what I mean? Like, it's just all that kind of stuff builds up.
I mean, Subway is $20 now for. Listen, I was so mad. Me and my girl went to the gym the other day, and we forgot our bottles of water. And there's a Subway right next door, so I shot in there real quick. $6.50 for 2 Dasani waters. I was furious. I mean, just furious.
Yeah.
He paid for the whole 24 pack right there. I was
exactly
so pissed.
Just you. Yeah. It's so even though inflation, numbers wise, like the impact and how people feel it is still really, really there. And
well, we just had that huge jobs revisions too. I mean, that was pretty crazy, which I don't know if that means they've been lying to us this whole time or what have you, but
just adjusting data.
Just tweak.
It's a little tweak.
It's like
800,000 people.
Yeah, it's a lot, man. That's crazy. Yeah. So I don't know. I mean, even with the data that's been coming out, I mean, they're still not tanking this market. I mean, you and I talked about last week how we really were fairly bullish until they start cutting rates.
Right. And so, that puts us, next week, we start September and rate cuts will be coming, and September, going into the election cycle and everything, doesn't have great historical stats in terms of a bullish narrative. So we could, peak up a little higher, maybe take out the overnight, the all-time high or get close, and then we could really start screaming down.
Well, we discussed that stat that you had last time regarding when the market was up 18% in August, what happens in September. And it was generally anything over 10%. It was pretty much red all of September, which kind of lines up with our rate cuts. And then I actually found this from TrendSpider a couple of days ago. Thought it was interesting to share here. But it talks about, again, kind of like what we're talking about, how the S&P has not been kind during election cycles. And so we are not only coming up into a rate cutting phase at all-time highs, which is a big red flag to me, but we're also, coming into the election cycle. And so I thought this was really interesting here that, in September, the average return was -3%. In October, it was almost 4%. So kind of telling about what we could be getting ourselves into coming up.
Yeah.
My guess is we pop the all-time high first, kind of, sweep the leg and that whole nine. And that's when I say that, I'm talking about the S&P as well. The NASDAQ it's got some things ahead of it. I do think that the NASDAQ is going to pop. I really do, but I don't know if an all-time high is coming. We've got some resistance up the top that I think could potentially shut it down, but neither here nor there. I still think it carries us through to the election. So Rob, I went ahead and pulled the news over just to kind of see what was cooking, to see if we have anything that kind of throw us out of this balance area here. And obviously, like you said, Monday's a bank holiday. Now, futures are going to be open, but the stock exchange is not going to be. So unless you're just a complete degenerate, I would probably stay clear of that.
All right, so I'll be trading.
Yeah, I know. You're like, I made 5 points. I made 5 points. So we got we got ISM on Tuesday. We got JOLTS on Wednesday. We got ADP and unemployment on Thursday, and Friday is non-farm payroll. So we have all week of basically juking ass moves coming up.
Yeah, big, and they're, all jobs related, which is what everyone's kind of looking at. Jobs and consumer confidence pricing stuff is what people are looking at to send us higher or lower. And so
this is a big week.
This will be a big one, and it'll be a bunch of the data that the Fed uses to determine if they're going to do, a quarter point or half a point rate change.
I think that's the real question, isn't it?
Mm-hmm.
Like what? Okay, so we know they're going to cut, but how hard? I mean, I think they would be foolish. I think it's foolish to do it at all. Based on what I hear from a lot of, like, again, these are talking heads. They're saying, like, the Fed should have cut a long time ago. Like Elon, he's like, "Oh, you should have cut a long time ago."
Yeah, exactly.
Yeah, but I mean, what the fuck's Listen, so it's like, the thing is for me is they claim that they're hitting this 2% inflation target. It's coming in, so they're like, okay, we can kind of tear back on things. My only question there is if that is actually true, why haven't we seen it yet? And I know that inflation is technically caused by government printing, right? Inflation is not really consumer driven, it's government driven. And so I guess my only question is if we're really getting into this target that they're talking about, then how come we're not feeling it yet?
I've been wondering the same thing, and I don't know how much of it is tied to the jobs numbers specifically, but I know they're trying to get some breadth of growth and trying to help out basically different industries that have been struggling in this high inflation environment.
Like Dollar Tree?
Yeah, like Dollar Tree. And so I'm kind of with you. Like, I was kind of surprised about the rate cut talks. I know it really came to light, 2 weeks ago, when we had that, 10% drop in a day, and Jeremy Siegel from Wharton School of Business was on, like, CNBC demanding the Fed, do an emergency rate cut. And then, by the end of the week, we made all the way back
500 points higher.
Exactly. And so it does seem weird to me. I think there's a bunch of things, going on, but it does, in terms of trying to, like, massage and keep inflation down, as well as keep the economy kind of rolling. It does seem a little, I'm surprised, I guess, it's my net. But I've always been surprised when they've been cutting, because, like, even when it was at 1%, they're like, yeah, we should cut a little bit more off of this. I thought, thought it was a little extreme.
I agree. I'm not old enough to say, I remember what happened in the 70s, right? So I'm going kind of like off of the historical data. But, one of the things that I felt like was always, like, in the Fed's toolbox is they could always lower rates in case they needed to stimulate the economy or the market or whatever. But again, like you and I have talked about, I mean, we're so close to all-time highs. It's almost like every time they've lowered rates because we've been in trouble, right? And they do that because we're in trouble, not because things are great.
Not because things are going okay. Yeah.
Yeah, right. And so I guess I find the thing a little disturbing, and I understand from what I gather, and you probably have more information on this than I do, but I also understand that they can't keep pulling back inflation too much, because then we enter into, it's not
stagflation.
Stagflation, yes.
Right.
Which is also, I guess, just as bad, if not worse, than inflation.
Because you really can't. Arguably, it's worse. And the way to think about it is almost like a plane or an aircraft when it's in a flat spin. You just can't get any air underneath the wings, and you get in this sort of vicious cycle. It's very hard to pull out of the inflationary environment. And you can't really raise rate. You can't really do anything. You're sort of paralyzed, and that's where they're trying to avoid that.
So so this kind of loops back to our original conversation, right? Yeah. So you and I are both talking about how they say they're getting into their 2% target. You and I are not, as the consumer, in my opinion, are not seeing any benefits so far to this whole, rate increase thing that we've been experiencing. Only the Fed feels these magic numbers that they tell us that we're experiencing. And so my thing is the prices aren't ever going to go down. Like, because, the thing is if they reduce rates and like all this other stuff, like if if inflation is truly coming down, we should have felt it already, right? And so by reducing rates, that's not going to help reduce inflation anymore, right? I mean, it's essentially going to kind of plateau us off to kind
It
of where
should
we're at.
like get more people hiring, and if anything, it could contribute to more inflation. And that's where
Like,
that's the cycle you don't want to get into, where
I just,
eventually, yeah, where you've got high inflation, and then you start getting people that get high unemployment eventually, then you really get into trouble.
well, they talked about that higher for longer, about a year ago. He's higher for longer, it's like, and we thought we were talking about rates, but I think they're really just talking about life in general, because I mean, I don't know how that if we've got shrinkflation, which is like, you get less chips in a bag for the same amount,
Yeah.
right?
We
got, like groceries are up 30-40%. I don't see how it can go down anymore if we haven't felt it yet. If they're going to stop, just cut it out.
Yeah, and once you get businesses that are used to charging $2 for a chocolate bar, it's really hard to like claw that back and bring it back down to something normal.
$6 for a bottle of water. You think they're ever going to stop charging?
Right? Yeah, exactly. And so it's really tough to like bring those prices down. So I'm kind of surprised.
Yeah, sounds like Portugal is in our future, or Venezuela or something.
Venezuela.
Right.
There you go. I've been trying to think about it. Like, if you were trying to manage the Fed, when would you want to like back it off? And it would be when I would think you would see a little bit more stalling. So I know they have a lot of pressure. So,
the real thing is, do you think it's political? Do you think it's actually they're doing it because it needs to be done, or do you think there's a political agenda behind it?
So what's interesting about that is they're kind of like damned if they do either way. Like, if they do it before, then they're helping out one administration. If they do it after, then they're helping out another one. And so it's really hard to like pick a side, because I feel like they're kind of rock hard place and they're in the middle of it. You're trying to figure out, what to do there. So I try not to think about it too much in terms of the political environment, but I'm sure, these people are appointed people. I'm sure there's it's very hard to completely extract yourself from that as well, right? Like,
yeah, I'm sure. I mean, these guys are kind of hold their jobs in their hands, right? They're like, whoa,
yeah,
you don't do this, you're fine.
Yeah. So if they're really worried about a recession, that's what they're going to do, is cut rates. But it's been really hard. They've been really happy thus far that they've been able to sort of get this sort of soft landing thing going.
Do you feel like we're in a soft landing?
Do I feel it?
If you were asked consumer confidence questions, how would you feel today?
Yeah, I would say it's not so. Yeah, I would still say things are pretty bad for most people. Like, for the average consumer, things are bad because their housing costs are now starting to exceed 30% of their income, as well as, just food costs and things like that. So between those two things, people are feeling a pinch, pretty high. Now, I know places like the tourism industry has still been fairly robust, so I can't like completely say, it's all doom and gloom. But from just what I can see and talking to people, it seems like, most people are feeling a little tighter than normal. And when they are going on vacation, they're cutting back on some of their spending, and they're making like more targeted vacations. Rather than do 2 or 3 things, they'll do one, or, they're still pulling back because they just don't have that disposable income.
Yeah. And, we were talking about auto loans too. So I've been looking for a car, and, I'm just kind of poking around. I'm not interested in buying a new car, but of course, if I'm looking for a car, I'm going to look and see what's new, what's out there. Right.
Yeah.
The cost of new cars now is fucking crazy. Like, I mean, so I live in Indiana now, for those of you who don't know, and everybody here has a pickup truck, and I can clearly see the need for a pickup truck. I
thought you would just get issued a pickup truck when you came to Indiana. Here you go. Here's your truck.
It comes with your state ID.
Exactly.
But a new pickup truck, like a base pickup truck now, is like $60,000. It's like, these are insane. You can drop for the Chevy EV pickup truck that they have on the lot out here. They have like 10 of them sitting on the lot. They start at $86,000. 86.
So, so this is a great segue to like car manufacturers. they make almost all of their profits on trucks and SUVs,
Okay.
and they jack up the prices as much as possible to those, because those cars and the profit in those cars allows them to make the really less expensive cars with less and less margin. And then there's this whole, you're probably wondering why is like Ford and Chevy like the biggest truck manufacturers in this area. There's this basically there's this thing called the chicken tax, which was like in the 70s. um, United States was exporting a bunch of chickens and things like that to Europe, and Europe farmers got pissed off and started to put a tariff on the chickens. And United States came back and said, okay, we're going to put a tariff on all foreign, basically, pickups and SUVs. And
Okay.
so that's why, like, if you were in Brazil or Italy, you could go buy a Mercedes SUV for a reasonable price, but there's like a 25% tax bringing them over. So they don't even bring them over to the United States. So there's really not the same sort of competitive environment, auto space, in the sector that you're looking at.
Interesting.
Yeah. So you're basically pinned by, you can only buy United States because they're the only ones that are affordable.
And the pickup trucks have high implied
and
volatility.
they have what's that?
They have high implied volatility. So
and they have the biggest profit margins. And then you can even, and then they do those crazy things like Ford makes that Raptor, which just they can't make enough of them, and it just has an off-road.
Dude, and they're so expensive.
Yeah, and they're
$100,000 for
$100,000 for something with like a racing off-road package that most of the population doesn't really need to go pick up their kids from school, but makes the speed bumps a little faster in the parking lot.
My cousin's got one, and he's had, like, he always gets the new one. Again, he lives in Colorado, but he doesn't really need it. Like, he just has it because it's like, he's like, and he only gets the one with the V8. It's got to have 700 horsepower, right?
Yeah, that works.
I'm like, what kind of fuel mileage are you getting here? And he's like, about 8. And I'm like, holy shit.
Yeah, so that's another way that they've gotten around like the CAFE standards or the fuel economy standards, is things like Suburbans are considered farm vehicles, so they don't have to apply to all the guidelines for EPA requirements. Now they're starting to put fleet requirements and things like that in there, but there've been all these like little loopholes and things that they've done to keep that market propped up a little bit,
That's
keep the margins high. Yeah.
I was reading this because you were talking about the profit margins on the cars or on the trucks. I was reading this when Elon first started Tesla, and I just saw this article like maybe a month ago. One of the original guys that was kind of poo-pooing Elon about Tesla and said that he would never make it because car manufacturers, and we're not talking about trucks or SUVs because he didn't start with those, right? He said apparently car manufacturers don't make any money off the cars at all. And so it takes 5 years for these cars to roll over into the service department. And that's where they make a bunch of their money, is from the service department parts and all that are apparently marked up extremely high. And then obviously, they charge $100 an hour for labor and et cetera, et cetera. But I guess that's why, supposedly, from what I read, and again, I don't have experience here, but from what I read, it's extremely hard for a new car manufacturer to come on the scene, because you basically have to have enough cash to float you for 5 years until the cars come back around to need service. And that's where you kind of make your money.
You sort of make it. Yeah. Like, and I think if I looked at the finances of Ford a while back, like most of their money was made in financing.
Oh, okay.
The financing arm.
Was
a big part of it. But like what you're saying with Tesla is also true. Like, to get your Tesla serviced is very challenging, and the prices are very high. Like, I think a year ago or whatever, there was a guy who just like, he needed basically his batteries changed out and things like that. And they're like, well, this is going to cost more than the car to fix it. So he just blew it up in the canyon with dynamite. And then we've had if you get your like back window broken, like the side passenger back window, it's like $4,000 to fix it or something. And so they are trying to funnel people only to.
They say those batteries are like $14,000.
Yeah,
$14,000 for a battery. That's insane. So I had a Honda Civic hybrid that I gave to my son many years ago, and right before Now this is pre-electric cars. This is when hybrids were still a thing. Well, they might still be. I don't know. But that battery went out right before the warranty expired. Thank God. But it was like $7,000 for that battery, and that wasn't a fully electric. So, when they told me that the Tesla batteries are like 14 to 20,000, depending if it's the long range or whatever, I'm like,
Yeah.
yeah, that makes sense. But dude, that's like an engine. I actually think engines are cheaper.
Engines is cheaper. Yeah.
Yeah,
And especially with the Teslas, they'll put a lot of the batteries are in small packets and they're in the chassis of it to provide some
yes, they're
stability. So
underneath,
it makes
right?
it super hard to
Yeah.
fix and replace those things. So
So
yeah,
I don't have anything I don't have anything against those cars. I don't know enough about them, but I'm like so not sold on the electric car thing just because it doesn't make sense to me yet. Like, not only are the resale values like dog shit, you lose 50% like your first year or whatever, but just the maintenance on these things is absolutely astronomical. And from what I'm told, and again, this doesn't mean that like Volkswagen's the same way or these other car companies, because now a lot of car companies are doing electric. But I've never really, I've only been in a Tesla when I got an Uber, so I've been in like two Teslas, and they seem okay, but they're kind of cheap. Like they remind me of the way American cars used to be before the Japanese came and made them like get their shit together. You know what I
sort of
mean?
like when the American car company malaise in the 70s, where like
Yeah.
they didn't care about mileage and would do everything they could
Dude,
to.
you can hear all the road noise, like I just thought it was very like there was a lot of squeaks and stuff going on. I'm like, yeah, this is like a cheap ass Ford from 1980. Like that's what it reminded me of. Now the technology is amazing. I certainly believe that Tesla is a technology company, more so than an auto manufacturer. But yeah, I saw this news article today that some guy flew his drone over the Tesla factory, and there's $40 million worth of Cybertrucks parked in the back, just sitting there. Yeah, $40 million worth. So I don't know if they're intentionally curbing the demand to make them more like
Well,
in
they've had
demand.
a bunch of those recalls and a couple other problems with them, and
Yeah,
yeah, like
yeah.
the fact that you have to push buttons and prepare your car to get washed is a little strange.
What do you
Um,
mean?
like if you take it to the car wash, you can actually short out the car and void the
Stop.
warranty. Yeah, yeah. See if we can find it.
What? I didn't know that. Yeah,
Yeah.
these things are. Yeah, it's just crazy. But $40 million of the inventory just sitting there, and those got to be the ugliest fucking trucks I ever seen. And I'm not saying they're not cool. They're a total Arnold Schwarzenegger, like apocalyptic now like type truck. But I don't know if I'd drop $100,000 on one. I think I'd rather buy a Benz or something. I don't know. So a tin can, a lemon, and a paperweight. While joking that it may be bulletproof, it does not appear to be waterproof.
Well,
Okay.
Tesla said it was a known issue that Cybertruck that when you do a screen reset, instead of resetting it the standard 2 minutes, it takes 5 hours.
What? After 2 months and $80,000 and less than 3,500 miles, it stopped working after someone took it to a car wash. It's great. They describe it as a tin can, a lemon, and a paperweight. That's bad, man. It's all bad.
What I find funny is, like when you call tech support and for whatever computer problem, they always make you reboot your computer or
Right.
unplug it or whatever.
Yeah,
And
yeah.
so when you need to reboot your Cybertruck, it has some sort of 5 hour process.
I saw that you have to hit two buttons and then it takes 5 hours.
5 hours. So it's not like, if you get like feedback that I don't know about you, like sometimes you press like the two buttons or three buttons for whatever electronic device, you want that like feedback that you did the right thing and it's working, not like a
Right.
5 hour like waiting period.
Not you don't want the circle to spin for 5 hours.
Five
Like
hours because you're convinced it's totally thrashed.
that
Yeah.
is hilarious. Well,
I know they haven't sold a ton of them, but 4,000 of them between basically November and April were all recalled, and
that was for the pedal thing, right?
yeah, the accelerator pad would dislodge or whatever. And but what's really funny is where I live, there's a house down the street, and they have two of them, And I just wonder, just really wonder, like what what makes you say, love this car so much, I want two of them.
This is all the Cybertrucks just sitting there. They can't sell. It's a lot.
You know what's weird is they're all so well parked, except for a couple, that it looks like they were just like dropped there.
Right? Well, so I read an article about a month ago that they've been renting out airport parking lots and private parking lots to park all the inventory of the vehicles that they can't sell. That they have so much back inventory that they essentially have to keep pushing it off places. Now, I don't know what you do with that. If you can't sell it, then eventually you're going to have to give it away, I guess. But, just kind of strange.
Yeah, it's not like the Macintosh Lisa that they just buried in the desert when they couldn't sell all of them. Like, I don't know what you do with these things.
Well,
Just held up lost.
this segues into something that you sent me earlier. So we were talking about retail investors, right? So we were talking about Nvidia, and you were, you had basically made the claim that you thought it was kind of getting into bubblish territory. And the reason that you brought that up was because of this right here. And I'll let you kind of segue into it yourself.
Yeah, so I got this from the Kobayashi letter on Twitter, which was just a neat chart that showed how much retail investors are in a couple, kind of stocks that have gone through sort of bubblish times, Nvidia and Tesla, and you can see that over the past, 3 or 4 months, retail investors are really, really starting to get long Nvidia, and I kind of have a theory that like when a lot of retail investors are into something, then a fall will happen eventually because usually they're the last ones in, and that combined with a PE around 60, and if we have these rate cuts, companies to start cutting back on some of their investments, I really do think you could have a bit of a fall in Nvidia.
Yes. So speaking of that,
Yeah.
this is SMCI, which is super microcomputer. This essentially was riding the piggyback of the AI boom off of Nvidia's whole ordeal. Apparently, they're in bed with Nvidia somehow, or they have. I don't even really know the whole story. All I know is that they're another chip company who had something to do with the AI stuff. And this thing like exploded, and we were all excited because we had a great call at like $277, but we never thought it would go to like 1,300 from there, right? Like just
Yeah,
absolutely insane.
that is crazy.
And now this thing is getting pummeled. I mean, it's down 70%. It fell from $1,230 down to where are we at now? What is this? $395, right? So it's like down 70%. And I guess is this a telling sign of what's coming for Nvidia? I mean,
I know Supermicro had some other things going on with them as well. So they make motherboards, a lot of things like that, and a Chinese-based company. And I think they had some bad news about businesses which were run, and was China able to sort of like backdoor and get some of the data off of some of these older motherboards and things like that. So I know they did have some news that wasn't super positive, but at the same time, just from a couple all these things together with Intel, Nvidia, AMD. Like Nvidia is obviously has the first mover advantage, and really really taken off. But like I said, between these other sort of semiconductor stocks, as well as what's been going on the macro picture, they really could come down a little bit, at least get a reset and allow you to get back into them.
Yeah, I don't know if we'll get this push again, though. My Lord.
You're right.
So, dude, listen, I really wish first time I've looked at this chart, really, I wish we would have been look at that monthly smack.
Oh my gosh.
My God. That's
perfect too. And it's a nice round number, just 1,000. Just get
yeah,
that.
Right.
You know what I mean? Like,
dude, what a sweet ass trade.
Yeah, that was good. That was really good.
You mentioned Intel, and I didn't have any intention of even talking about this, but I wanted to make sure it was on my list. Dude, this thing is getting annihilated too. And Intel is one of those stocks that, like, all growing up, they were a leader in the space and they were innovative, and they just, I never would have in a million years thought that, this would happen to Intel. I mean, especially not with the chip AI boom that's been going on and everything. Just
But it's
access.
something that they really haven't participated in that much because they haven't made those sort of same investments in that arena. So
Okay. So
so
what are they more focused on? Actually making chips for computers
yeah,
or?
they're still like in the server and CPUs, floating point calculations
Yeah.
and things like that, and they haven't made those same kinds of investments
So
that
what's going
other
on here?
companies.
I mean, why are they? Do you know? Do you have any idea? I'm just curious between you and I.
I can't remember exactly what it is. I don't want to say, but I think they had a couple foundry based issues. So you have things like TSMC, which is sort of
Mhm.
like the world leader in foundry production. So they can go down to 4 nanometers or whatever when they're etching their chips and making their chips. And I don't think Intel has kept up in terms of how well they're able to keep miniaturizing things and keep a high rate of speed in things like that. Like if you compare like an AMD CPU to an Intel CPU, an Intel CPU will typically run faster, but much, much, much hotter.
Yeah.
And as things are, miniaturizing and you try to keep cranking things down, you have to be able to speed without just overheating and cranking things up all the time. And so their simple answer was always just turn up the clock speed, and that's sort of running out of space.
Interesting. Because I have had AMD chips in the past for my trading computers, and they never really served me well. Maybe I had the wrong ones because
Oh no.
I had a Threadripper, and they were generally used for like media and stuff like that.
Mm-hmm.
Now I have AMD i7s and i9s, and I couldn't be happier. And
Oh, the
so
Intel i7 I know. Yeah, yeah.
yeah, so I couldn't. I mean, I guess it shocks me because for me, and again, this is me in my small little bubble. I just figured they were like, you
Yeah,
know,
they're still dominating, and they
yeah,
still do dominate in specific sectors. And but if you want doing like content creation and you're needing to do a ton of parallel processing, people will still do the Threadripper route because it's cheaper and all the cores will,
right.
you know, you can offload. But you really have to have a lot of the software we use is single threaded, so having something like a Threadripper isn't. Doesn't matter how
Yeah,
many cores you have. We're only using one,
that's
really.
where I ran into issues at. Yeah, I
Right.
thought I had this badass CPU. I'm like, yeah, fuck yeah, right. And
Yeah.
then it did absolutely no good at
Nothing.
all for me. Nothing. It was such a waste. I had this huge water cooler thing going on, and it was
Hmm.
all fancy and schmancy. And it ended up being dog shit. It was
Yeah, yeah.
crazy. So yeah, now I'm like more concerned about single core functionality or whatever. And so yeah, it's crazy. Here's something interesting. I always like to see what the analysts think, and that's one of the nice things about TradingView. They're trying to say this thing's only worth $27, which is like barely
Yeah.
before
Just
it's at.
pretty close to where it is. So yeah.
Yeah, yeah. There was some guy I saw right before earnings. This
Hmm.
kid, he was like fresh out of college or whatever, and he has a 10-year plan. But his grandmother left him $700,000 or $800,000, and he put it all into Intel right before the day before earnings, and the day of earnings it sank like 22%. And so yeah, so he claims he's going to hold on to it for the next 10 years and see
That'll
what
leave a
happens.
mark.
Yeah,
Yeah, I mean,
which might be okay. I
look. I
mean,
mean, look. If you would have bought in, go back to your like monthly chart. Look, if you would have bought back in uh, 2004, you're basically the same price for 20 years.
yeah, or even 1997,
Well, yeah, 97. So yeah,
depending on how long you want to hold it,
yeah,
right?
great.
See, I know we didn't plan on talking about this, but this is another one. So Warren Buffett recently started legging into a very large position in Ulta Beauty, which I thought was interesting for him. He sold a bunch of his Apple stock, as you know, that we talked about last week, that he's
Hmm.
been holding for a while, and he started really building this position in Ulta, which is weird because it's a non-dividend paying stock as far as I recall, which he's usually very much into. And yeah, they are profitable and stuff, but I just thought this was a really interesting buy for him. And this thing got smoked on earnings too. And obviously we're into some big support here, but I really am more interested in like this $240 area.
Yeah, I think that's
And
something
maybe
to
that's
watch when it gets back down there. Yeah.
yeah, and he's clearly a better investor than me. But I was just surprised because he was starting to load the boat around $400,
Yeah,
and
I'm
so
surprised.
Yeah, I just thought it was kind of strange that that was his
I'm
view.
surprised because usually his investment philosophy is you buy things like Coke that have some sort of competitive advantage and kind of like a moat around their thing, and I just don't think of beauty supply places like having that sort of same characteristics. So he must be seeing something there that I'm totally
Yeah,
missing.
I agree. Because it was one of the weirdest when he announced that they were, starting to build a position. I was like, really, Ulta Beauty, like of all things. And I know they own Sephora and a few other places that are now pretty big. I see their shops everywhere and
Hmm.
strip malls and stuff like that. But still, I just, whatever. I just thought it was strange.
But I'll look at it at 273.
Yeah, absolutely. I think it
Yeah.
looks right down there for sure. You want to talk about the markets?
Chat about ES or whatever.
All right, so like we were talking about, we're still bullish. We have no reason not to be. We'd had a weekly close actually above the entire weekly leg down. Based on how I do this, this was the support that was lost, but this was kind of like that just put the finishing touch on things for me, Rob. I mean, we're so
Yeah.
close to all-time highs. It's like you could smell them up here.
Yeah.
So this is SPY, guys. Just for those of you who are wondering, we're not looking at SPX or ES right now. I thought this would be the best and cleanest. I think the majority of the people who are investors are actually trading the SPY. And as you can see, we came down and we played this massive support, and we held it. They basically tested it 3 times, which was really the support that created this move to the low. So hanging on to this was a monster. I mean, this was a big deal. And so as we get down into this, I mean, well, first off, before I do that, look how close we are, Rob. I mean,
yeah, we're within a frisbee throw of all-time highs.
Let's just see. We're 0.25% away.
Yeah.
Yeah. So I think it's pretty logical to assume that this is going to happen. Again, I was thinking it was going to happen last week, and instead they pushed my pooper in. But I think we're closer now to the actually being able to. We had this close on Friday was so strong that we basically closed above not only that weekly, but we closed above our previous leg down right here. I mean, this is just an absolute symbol of strength to me. I'm going to go ahead and go into the 1-hour chart because we're so close up here. You can see how we were kind of bouncing around, and you and I were really kind of breaking this chart down before we started talking about it. And we have we have 2 really great places that we need to be looking at to buy. And I'll put this is a small time frame. This is a 1 hour there. So we have this spot here at 560 basically, which is a weekly and a daily that is untested. And, that is a fantastic spot to buy. You can see all the reactions that it got, I mean, essentially for the past 2 weeks. And then if we really were to pull back in the pocket, which would be sweet, 558, 559 area, this is where it's going down at. And you and I did some investigative work on ES before we started this podcast. And I believe the weekly POC is basically right here. Right?
Yeah, same place.
Dead ass in the middle. And then we looked at the point of control for Friday, and funny enough, it's all the way down here. And so we have, if it was going to pull back into this leg end down here, not only is this untested, which is a beautiful spot. I love this. But, we also have that point of control on our side, which was, for those of you guys who are unfamiliar with that term, that is essentially where the majority of the time was spent on Friday, which also means that's where the majority of the money was spent. So, and what they also accept to be fair value, which in turn usually rejects when price approaches it on first touch. So we have the weekly point of control here. We have the daily point of control here. This area is extremely attractive to me, especially after we had that monster close on Friday. You got anything you want to put in here? I think that was.
No, I think we're so close to all-time highs, and the push up in the latter half of the day on Friday, and the strength of how we closed just really made me think that we've got a really good chance to hit the all-time high fairly soon. And
Agreed.
And so I'm just going to be looking for longs. I'd even take that 562 area as a long as if it started to turn there.
That's so funny you said that, because when you were done talking, I was going to say, knowing our luck, they'll play this.
Yeah, they'll play that.
And they'll never get down here, and they're like, hey, see ya.
Exactly. Yeah.
Yeah, because I mean, this clearly got a lot of I mean, you could like look at this, boom, 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 boom. I mean, this is a big spot too.
Yeah.
So, and it's untested. It's untested. I mean, if you look on the daily time frame, this is the top of that weekly leg end that we were just talking about how awesome that was that they closed above it. So, I certainly don't want to pretend that they wouldn't play it again for the next ride up. I guess I can hope and pray they pull back in the pocket for us.
Yeah.
But no telling if that's going to happen after we've had 2 weeks of balance. And guys, just so that you understand, I'm going to show you something that I learned a long time ago when I was understanding price action. And I was telling Rob about this. It's kind of a little joke because it has a stupid name, right? So in the beginning, when I first started trading, I'd see these huge moves. And then they'd come and they'd do this number. And I'm like, oh shit, this is going to roll over. Right. And so I used to get short here, assuming that the end of the move was over and this was distribution, and then they would come down. But really what's happening here, and again, there's no way for us to know for sure, but what we do know is that we're extremely bullish. We haven't lost on the weekly or the daily time frame. So support is very much still up. And what this usually is, and I have a silly name for it, I call it the P head or the Peter head, because it looks like a P. And really what they're doing is they come up here after an extended move and they balance out and they accept value until they get the next push up. And I think Rob can concur. When I was telling him my little story here, he was like, yeah, this is pretty standard stuff. And I think it takes a while. It takes a little experience to see it happen in real time. It's obviously everything's easier after the fact, but this is before it's happened. So this is kind of my assumption of what's going to happen here, especially after 2 weeks of just kind of percolating at the support to the highs here.
Mm-hmm.
So what do you think?
No, and usually when you have this much coiling, you do get a pretty good pop on the other end, because everyone who's wanted to make a trade in that area has either plus or minus. And so people are going to have to unwind those shorts unless they've got some pretty big stops.
Absolutely.
And we could get a look above and fail. That's always an option, especially knowing the statistics for September and going into an election. It may not get the same kind of pop that you would get normally, but I do think you're going to get some pressure.
I agree. And I'll say this, and this is, again, we don't really know for sure. There's no way to actually know, but I do know after 2 weeks of coiling, if you were to do a measured move, you could probably at least count on that. And I haven't done the measured move, but just roughly, let's just call it 73 to 75. So you can count on something like that. But really what I'm looking at also more importantly is this is the leg end, right? And so it wouldn't surprise me at all, like Rob said, to kind of poke our head up over the leg end, no matter how high it might be. That would essentially satisfy our trend requirement, so that if we were to pull back, that we could find a nice support area to play. Because if the way that I read these charts is if this was to fail here, we would have to make a new low to find buyers. And so if they can make a new high, then trend has been satisfied and you create another new leg. And so once the new leg is created by creating another new high, then you can find an area of support, which is probably right in here somewhere, where it does one of these numbers. But if it didn't make a new high, then you're going to have to seek new buyers, because none of these guys could get a job done to make a new high. And so you got to go find new buyers lower. So I think the new high requirement is certainly coming, and it would play well in tune with the pullback in September, like you were talking about.
Mm-hmm. Yeah.
So just my 2 cents on that number there. So I would be interested, and actually, let's just do this just for shits and giggles, Rob. So here's the deal. I mean, we're going to pull this fib from the lowest point back to our pullback here, just to kind of see what we're looking at here. So what is this called? 100% extension, essentially, is 582 here. Let me see if there's any. Okay, that's below us. Ha! Look at that. Look at that. Look how they held the 618.
They held the 618.
That's crazy. Goddamn fibs. I hate these things. Piper, if you're listening to me, I hate these things, but they work, you bastard. Okay, because he loves fibs, and I cannot stand these self-fulfilling prophecies, because look, we played this daily. I mean, it aligns perfectly with my daily. So it's like, what did we really play? Did we play a fib or we play the daily? I don't. So
I'm gonna go with daily.
Yeah, I'm gonna go with the daily too. So let's just look and see, just from a realistic expectation, it's only 3%.
Yeah,
I think that's a very reasonable
that
target.
seems pretty reasonable.
Yeah, I think that's a very reasonable target. And again, we're not saying that that's where it's going to stop, but I do certainly feel like that's a reasonable target. That's probably a little bit more unreasonable, which is another 7%. But I guess in this market, I mean, it's hard to tell because really reason is thrown right out the window as far as what's supposed to happen and what's not. But it is what it is, I guess. So what do you got to say about this? Which one do you think? Which one are you going?
I'm leaning towards the 82 or a little lower, right around there, and then
I think that looks
come
reasonable.
back down for a pullback down to 36 or something.
Yeah, that would be great. I'm going to go ahead and talk about QQQ real fast too.
Oh, I see what you're talking about.
What's that?
Oh, just how far away the all-time highs is in the Qs.
Yeah, way different. So here's QQQ, guys, and like Rob just pointed out, he's like, we are so much farther away from the all-time highs. That's why I said I can smell new all-time highs for the S&P. I think that the Nasdaq, and again, I don't know that it's not going to make a new high, but it certainly has a lot more overhead resistance. We have this huge monthly at 496.50, and we got this first daily target at 491. We talked about this last week, but look at this thing. I mean, tell me this isn't this thing is bull flagging hard.
Yeah.
So if this thing pops, I don't see any reason why we wouldn't come up here. But again, it's hard for me to really get super excited and say, oh, we're going to, make all-time highs, because this is a monster level up here, guys. So we do know that, from what and again, I don't know how much truth there is to this, but I heard somebody say that the NASDAQ tends to soften up a month or two prior to the S&P 500. And I don't know if that's because they usually get the rotation out of tech first, but it kind of makes sense. And especially given where we're at right now with this, but
we also have that antitrust news with Google, which I'm sure is a huge component of this.
That's a very good point. You're right. Yeah. So this is, dude, look at that channel. I mean, we just broke out of it Friday. So this is looking pretty sexy to me. There is a place to pull back and get long in here, and I'll just, we'll talk about it. I was actually going to do a video on this because I have to redeem myself from last week. I was super bullish this last week, and they didn't, they bought every pop, and so we didn't get our head split, but we certainly didn't get the 496 that we were looking for. But I do believe that we are approaching that potential position now with this huge flag. You'll have to excuse all the lines here, but for me, really, we need a breakout above the weekly at 478 for a confirmation. But I personally would be willing to buy this pocket down in here. There's a 473 daily. There's a 1 hour at 472, and that 474 has another nice 4 hour here. I would be interested in this whole pocket. If you guys recall what the ES looked like, it basically is the exact, or not the ES, but the SPY. It's the exact same structure. It's the exact same spot. It just looks a lot more bullish as far as, that's concerned. Right now, the daily is not truly gained here, but I did like this solid close. And this is kind of a big deal for me. I think this is a good opportunity to try to get long up into this potential area up here. I know. All right, guys, we're all done. Rob got a call from one of his OnlyFans.
That's right.
He's got to go. He has to go tend to his other clientele. And so, Rob, it was a good week or a good session here. I appreciate you going over everything with us. And, we'll do it again next week.
Yeah, sounds good. That was great. Thank you so much.
You make sure you enjoy your holiday. I'm going to take this extra day and really kind of do some self-care. And so I will see you bright and early on Tuesday.
Okay. And I'll probably work on charts this weekend. So, yeah.
That's right. Fair enough. Well, you know where I'll be.
Yeah, exactly.
All right. Cheers.
Yeah, cheers.
Good.